So how do you invest around what could be either inflation or a recession or both? As we look at the Dow leaders, take a look. We've got Salesforce up 0.75%, followed by Home Depot, Dow, Apple, Chevron. Let's get to our traders on the floor show, because they are the ones who can give us a sense of exactly what you should be doing right now. Dutch Masters, you have a very interesting trade. Okay, the last time, which was, I believe, last week that we talked to you, you were feeling a little more comfortable. Now, you are definitely a shorter-term trader, you and your team. So tell me what you're doing now. Do I even want to know?
It's so good to see you, Liz. Yeah, you know, last time we were on, we were feeling pretty good, and actually we decided to go long the market, and we were right for about an hour and a half, which is not long enough.
That long, okay.
Yeah, that's not long enough. Even for a short-term trader, that's not long enough. So we made the mistake of going forward with the thesis without any real evidence that the dollar was rolling over, which it did not do. And so a host of other things when we did our triage of the trade, and we lost about 11% on our positions that day.
Well, which one specifically? Which one specifically did you lose out on?
Well, we were long the S&P, and we were long the Qs, and through the triple ETFs.
Okay, and now, I want everybody to brace themselves. You are shorting both the S&P and the QQQs at the moment, and there are ways to do that, right? SQQQ and S. Let's see, these are wrong. Everybody.
No, that's right.
Oh, those, but you're shorting them. But aren't there are mechanisms, right?
Yeah, well, you buy these. These are inverse ETFs. So you buy the SPXU, and that gets you.
There you go. Okay.
That gets you short the S&P 500 with a 3 times leverage. So you don't have to put as much money in to get more exposure. Same with SQQQ. We also, our Whirlpool short is working out very well. The Peloton short is working out very well. And we put a new short on today, which was Beyond Meat. That's becoming a real mess. This was an almost $200 a share stock that's now in the 14 area, so that's pretty bad. Mm-hmm. They completely misjudged the size of the fake meat market. And they misjudged a lot of other stuff. From what we understand, there are a lot of executives that are jumping ship, probably because their options are so far underwater. But the reality is that's our latest short. Now, yeah. We are looking at making a long purchase here near the close that's very relevant, and that is something we talked about a while back, which was eggs. We're talking about CALM, which Claman. They are all about eggs production, egg distribution.
Yeah, those prices are really jumping with eggs. I think they were the highest when you break out bacon, meat, fish, everything. Eggs saw the biggest jump. And so right now we do have Claman Foods. This is the one-year picture. Dutch, something's in the water over there. You're picking this one right, certainly. I want to bring in Scott Redler to the conversation. Scott, I know you usually look at equities in particular, but we got to show the 2-year yield, because we've already shown the 10-year yield and what that has been doing. Climbing. The 2-year is pretty much crazy once again, 4.316 at the moment. How does this affect the psychology around equities?
Well, the yields have been affecting it for over a month now. Every time you saw so many of the different yields go up, whether it was a 10-year, whether it was a 2-year, there were computers programmed to sell the market. A lot of us have been looking for clues on which way to go, just like your other guest. And every day when yields are making higher highs, TLTs are making lower lows, US dollars going up, the computers are selling equities. So that's why we've been trying to stay out of the way. If you remember, I believe, for mid-August, we were talking about a summer topple. Everyone was talking about a move back to highs, and people didn't really believe in what Powell was going to do and how long he was going to, stay the course. But, I do think, like Liz, we talk about opportunities. And, today's a very important day, by the way. Today, tomorrow, we're testing that 36 area. I think your other guest said that he was shorting around here, with an oscillator, minus 80. I think as hard it is to be long right here, it's just as hard to be short tactically. That's why traders are frustrated, and they're trying to figure it out.
Okay. Can I just jump in here? So if we can put up the year-to-date pictures of the S&P down, NASDAQ. Scott had been the one to say after the August horrific, atrocious consumer price index number came out, it was much hotter than expected. This is inflation at the consumer level. Scott was the guy who said, we will test June lows. Dude, not only did we test June lows, we tested December 2020 lows here. So to me, as I look at all of this, I'm asking you, what's next?
Well, we've been watching 36 in the S&P. Right now, it's struggling just to get an oversold down. So that's saying the buy demand's really not here. I think if you know your time frame, whether it's intermediate or macro, short term, I'm testing some longs right here. I'm testing because shorts, like late shorts, might get squeezed. I think the next hour is very important. The S&P needs to hold right here. The SPYs need to get back above 364. If so, we could have a little last hour squeeze. That's from a tactical standpoint. From an intermediate standpoint, I told you, the last week or so, I just put some money back to work in an S&P fund for, my intermediate, what I call the blood on the street account. So it's 50% in, 50% in cash, because you have to have some cash just in case we don't hold you, just in case we get to the 32 to 3,400 in the S&P cash. So that's the next big level if we don't hold this 36 there.
We got 3649 at the moment for the S&P 500, down just flat here, 5 points. Before we go, Dutch, how much credence or weight do you put into the fact that yesterday the Dow closed in a bear market once again?
Well, we look at that. I mean, from a psychological standpoint, it's important. I think the levels that Scott was talking about are real strong technical levels. Here's the reality. Jeremy Siegel was my professor. He's the smartest guy in the room. He had a meltdown last week about the Fed.
Right.
You cannot ignore the smartest guy in the room when he melts down and calls the Fed out the way he did. I suggest everybody watch what he said.
Well, can I just say he was on Neil Cavuto's show today at noon.
Oh.
Noon to 2, yeah.
Yeah,
Fresh.
well, I mean, that guy has called it right since I was a kid, and I was in his class. And the bottom line is that in spite of crashing commodities, crashing stock market, crashing bond market, and crashing currency markets, the Fed is still talking about raising. And as long as they do that, this market's going down.
Well, let me just paraphrase, because on Neil's show, he said he sees inflation actually going down everywhere, quote, and that's what he told Neil. But I find it interesting. Neil Kashkari of the Minneapolis Fed said he's not seeing meaningful dents in inflation at the moment. So you go with Siegel, you go with Fed presidents. I know which one you guys are choosing. Scott, Dutch, great to have you. Thank you very much.